Hello guys, and welcome to this Market Maker Levels, Secret Levels extra bonus video, which I did say I would record. The original was quite some time ago now, and I promised I would show you a way where you could add some rocket fuel to that system and hopefully do a lot better, have a higher win rate and a higher profit margin. So without further ado, I'll invite you to join me on the inside, where we'll look to find out how to increase our risk rewards, how to do a set and forget, how to know our trade is coming up the night before, and hopefully you'll find this of great benefit to your trading education and career. See you on the inside. Downward facing, and that's a no trade because price doesn't fall below this 000 to 0900 box. So that's a no trade. So NT stands for no trade. If you see that, that's what that means. Just so you don't have any doubts, I've written it down. Now here we've got 2 hours to the upside, and the 0900, the 00 to 0900 box price moves above it, and we get our 2 to 1 off that box. So I'm just showing you with the fib here. You can see the 2RR level here, and the reason this is a sort of recording of a recording, and the reason I'm doing this is that my current laptop doesn't go as far back as my desktop PC, so I've actually recorded this off the desktop PC. Now this might be a break-even win. I'm not sure whether price broke out here, whether price, in fact, I'm pretty sure that price came down and went to the downside before it actually broke out to the top side. It wouldn't have made 2 to 1. As you can see, 2RR is above price action, but it certainly would have probably have made a 1 to 1 on that. And then this next one here, we've got 2 upward arrows, and we get 2RR. You can see it hits price action there, and that's a 2 to 1 winner. So moving on, so I've gone from the beginning of October to show you these trades, and it's important to have a look through to see actually how the market, how this method actually takes a few days to play out often, but the results are so good that really it's worth. I mean, there's a whole week there where you don't get that particular setup, but then some weeks you'll get two setups. So it's just going through here basically to show you the different trade setups you can get. I mean, this one was on a Friday, which is unusual, but you know, if we trust in this system, which is the 2 arrow system, which I'll go into in a bit, you can see that it took Tuesday, Wednesday, Thursday, Friday, and into the next week to actually make that number of points, but a good level of points indeed. So with this system, when it does kick off, you do make a really good, I mean, that's a fair bit of price action there at 2 to 1. And it may take all this time to come in, but really it's all about trusting the metric and trusting that this particular system does have a high degree of success. And if you're patient and you can hold your nerve, which you will get 2 to 1s sort of 90% of the time, and it's well worth waiting for, and you're not risking very much for a 2 to 1 reward. And even when you've got relatively high margin, your account should be able to stand this. In addition to whatever else is going on, whatever other you may be trading this box, you might be trading this box here, but when you get one of these 2 to 1s, it really is worth holding out for the result. So this one here, even this one makes it reasonably comfortably. Oh, in fact, it's only just it makes it, but it does make it. So, and we've got over December now. We're into January. January is always a tricky time. The first couple of weeks in January, market takes a while to level out. Over here, we're back a nice 2 to 1 win. Then the next week we've got 2 break-evens, but they would have been wins at 1 to 1. So, I mean, you can take the 1 to 1s because they're more often than not they're a break-even. Here's one that lost, just to prove me wrong. But, you can't always win. Although we do win most of the time, and most of the time we win twice what we risk. So, well worth trading this system. Now, I've only back tested it so far on this pair. You obviously have to do your due diligence and back test it on this pair further back if you want, under different market conditions, and check out different currency pairs. But I think you'll find that all in all, this is I mean, here you've got 3 days in a row at 2 to 1. I mean, you'd really, 4 days in fact at 2 to 1. That's when the market's trending. This system, and it's moving with force. This system does pick up the high likelihood trades, and that's the beauty of it. It seems to sniff out the best trading opportunities at the right place in the trend to get you in to make a decent risk-reward profile. So we're now up to April, nearly at the end here. So thank you for being patient. I'm sure you'll see that it's all worthwhile when we get to the results at the end. And so here we are. Here are the results. We get 40 wins and 7 losses, just trading higher volume. So anything that's got increasing volume, not higher volume, but increasing volume. If we just traded those, we'd get 40 wins and 7 losses. And that's a pretty good rate of return. And I'm just writing this in painfully slowly. That's meant to be rising volume, not decreasing volume. I've written that slightly wrong. Then the one underneath is if you combine volume with higher high closes and lower low closes, you get 25 wins and 2 losses, but it does cut down the number of trades. Then at the very bottom, if you trade increasing volume plus higher high or lower low closes at 2 to 1, you get 21 wins and 4 losses, which equals 42 wins and 4 losses at 1 to 1 equivalent. So I hope you find that really interesting, and hope you will trade it at some point and find it lucrative. See you soon. The previous recording, we found out how we would trade when we got 2 arrows pointing in any direction, and that would be our signal to go long or to go short. If the 2 arrows were pointing downwards, we'd go short, If two arrows were pointing upwards, would go long. So how did we derive that information? So I just wanted to show you here how that's done. So say we've got increasing volume here. If we look at this arrow here, this candle here, we can see that it closes at the crosshair here, and it opens here, and it closes lower than the low of the previous candle. So if we get a lower low close, we would put an arrow on the next day's candle. We can't see, let's imagine the market's got to this point, we can't see this candle, but we can see that this candle has closed lower than the low point of this candle. Below the wick of this candle, it's closed. And so that gives one arrow, potential arrow, to the next day's trading. The other thing we can see is that this volume bar, a green volume bar, which is higher than the previous volume bar, is telling us that there's increasing volume. So we want both momentum and volume. So we know that on the next day, we're going to put another arrow to signify increasing volume. So now we have a lower low close and increasing volume. So this candle is the 13th. If you look at the date window here, is the 13th of March on the hourly chart. So if we go to the 13th of March, which is here, and this is our blue line, we can't see any of this at the moment. Let's pretend. We go to the hourly chart, and we can see that this is on the midnight 0000 of the 13th. So we wait till 10 o'clock in the morning, which is the close of the 9 o'clock candle here, and we insert a rectangle over the first 9 hours, like so. You may not want it in this lurid green colour, you might choose a different colour. And I'm just trying to get it so it's accurate, but it keeps dropping down here. Never mind, that's you get the picture. And what you want to do around this green square, where these red lines are, you want to place an order to open. Now, if the two candles were pointing upwards, the order to open would be placed over here on top of this chart, and that as soon as price moved upwards, you'd be in a trade. But because we've got two downward arrows, we want to place an order to open just below the low of this block of price action. So up to here, these first 9 completed hours candles, we put an order to open just below this. And what we're looking for, if I zoom out, what we're looking for is, and I'll get my Fibonacci tool to demonstrate the high of this so that's the low of the price action. This is the high of the price action here. And you can see that price came down, and I'll zoom back in just to demonstrate the risk we were taking. We've got our stop above this red line, so we put our order to open below, we put our stop above it, and we would be risking on this trade approximately 100 points. And at 2RR, you can see the 2 R's there, so we should be getting around 200 points reward. So we're getting a 2-to-1 risk reward on that trade. And we'll find, I think in this sequence, I can't remember now, something like a 90% win rate, which equates to 18 1-to-1 wins and 2 losses, which is a very good win rate. Approximately, I mean, these win rates go up and down depending on how the market's moving, how it's trending, etc. But on average, you're getting a very good win rate because you're only trading this system. You're only putting your orders to open in one direction, the direction that's given to you by looking for increased volume and increased momentum signals in the market. So we knew that we could, because this was a lower low, lower close, and on increasing volume, this next candle here is a lower low, and we can see here, and it's closing, it's this next candle here, this is a lower low, and it's closed low. I'll get this blue line out. Now the market's moved here, we've traded to this point, we've got a lower low and increasing volume here. So we want to put an arrow here for the lower low and another arrow for the lower low close. So we know, we'll put an arrow here, that's a lower low, that's a lower low. So this is a Sunday candle, so we just shift the arrow over. Your platform may not have a Sunday candle, in which case you just go to the next candle. So now this is the 16th of March, because we've had the weekend in between. And so if we go to the hourly chart, to the 16th of March, zoom a little bit. So here now we're at the 16th of March, and we get our square rectangle, and we go to the 0900 bar, which is this one. And we put our square in, we put in our order to open will be just below that red line, and our stop will be just above that red line. And if we zoom out it, I can do that, I can zoom out, and we get the Fibonacci tool, and we put that on the low and the high of that box. We can see 2RR here. So that would have been the Tuesday, and then the Wednesday we would have seen our trade filled at this point here on the 2RR. So I hope that makes some sense to you, and you can see how this is operating. Now let's just look at an up trade, because those were two down trade. Oh, sorry about that. Those are two down trade examples. So now let's go back to the daily. We'll look at an up trade example. So where's a clear? So here, for instance, we zoom in a bit. You can see here that we've the market's going upwards, and just for an example, this candle here closes higher than the high, the top of the wick of the previous candle, and you can see that there's increasing volume. So because it closes higher than the previous day's candle, the next day gets an up arrow for the higher close, and because there's increasing volume, the next day that hasn't yet started, we're imagining the market so far that we can't see past this candle. This is where we've got to. We can't see any of this here, but we can put our two arrows here. And so when we go to the hourly chart on the 26th of March, so we'll go to the hourly chart on the 26th of March, which is here. So this is 0000 and this is 0900. We'll take our rectangle. This is our 0900 bar. See if we can get that to fit. And then we'd have our stop. Because these arrows are pointing upwards, our stop is underneath this block. And our order to open will be just above here. And we can shrink this down to see how this trade would have worked out. We've taken our Fibonacci from the high to the low, and we get 2 R's here. So literally the next day at 2 o'clock in the morning, we would have woken up to find that we had won that trade, and we'd have been risking at this point, we'd have been risking about 140 points, and we would make about 280 points with our 2RR risk reward. So I hope this outlines the methodology to get your 2 arrows, and that you'll be able to put that into good practice for your benefit. Don't forget to like and subscribe if you're not already doing so, and please share this method with other trader friends. Click the share button, and we'll see you when the next one comes along. Bye for now.